Hi, I'm Evaldo Albuquerque, and today I want to talk to you about oil. Last Wednesday I wrote an article about oil and I told you why I expect oil to continue to move lower. As you can see, oil had a very bad week. It dropped from 105 to 95 and is now trying to rebound from the 200-day moving average that you can see here, this green line. One thing to keep in mind is that usually when you see a gap like this, like we have with oil, a gap followed by a big candle, it usually means the beginning of a big trend. You can see that happening here when oil rallied from 85 to 115. We didn't have a gap, but we had these huge candles that indicates a big change in sentiment. And you can see also here a big candle when oil dropped from 115 to 75 last summer. And you can also see a gap right here followed by another big move. So usually when you see a gap followed by a big candle, it indicates a big change in sentiment, and usually this change in sentiment is followed by a big move. So as I mentioned, now oil is trying to find support around 95, which is the 200-day moving average. And as you can see, also it's a support area because in the past oil tended to rebound from 95. So there's a lot of demand for oil around 95. So that's just another key level for you to watch. If oil manages to break below 95, it will indicate that things are getting worse in the global economy, and the way to profit from lower oil in the forex market is to short currencies that tend to follow the price of oil, and that includes the mainly the Canadian dollar and the Mexican peso. So keep an eye on the chart of oil, and if it closes below 95, it will be a good indication that you should be shorting the Canadian dollar and the Mexican peso. That's all I have for today, and thanks for watching.